Hey everybody, good Monday. Welcome to 12-Minute Trading. My name's Doc Severson. Today is the 30th of June in 2025, the last day of the month, last day of the quarter, halfway through the year in 2025. I can't believe it. This year is flying by, and it's been quite we've had all kinds of fireworks so far this year, and I can't wait to see what happens in the second half. Dave, what are you thinking about the month of July?
July, the last 10 years, the last decade, we have not had a red July. So it's been green every single year for the last 10 years. So if that tells you anything, that's what we have to look forward to. I do think, we'll show the charts in a little bit. I do think that we could see a little bit of a swoon, not this week, maybe next week into the following week, just because the daily chart's pretty exhausted and the weekly chart is still charging up, but it wouldn't be much. Maybe a pull back to I don't know 6,100 or 6,050 on the S&P, right? Something like that, and then right off to the races again into August. The uh, the interesting thing right now, you and I were talking about this before we jumped on today. Um, I don't know if anybody's seen, it's out there now. Trump sent a letter to Powell, like showing like the top 40 countries with interest rates, and US is like 35th on the list because we're like the highest. There's only like five countries that are higher than the US for interest rates right now. And he's excoriating him in the letter, calling him too late, telling him he's losing the United States billions of dollars, and so on and so on. And at the same time, they're floating that they're within a couple weeks of picking Powell's successor. And so I it's this new person, whoever it is, and some are saying it might be Scott Bessent, but whoever it is taking rates to zero. Like if Trump's putting them in there, they're taking rates back down to zero. I think we're headed for again a ZERP world where rates are one to like 0 to 1 and deficits as far as the eye can see. I think that's where we're just headed is to super low interest rates. We keep creating deficits and deficits, but it is a recipe for like a ultra bull just based on the inflation of the assets because of the money that you're printing and spending in debt and deficit and the fact that rates are like next to zero. I just if this is where we're going and it really seems like it, you know,
So, Dave,
it's
what are the
gonna be
pros
wild.
from the investor that's listening to us today? What are the pros and cons of that type of environment? Again, if not that we,
Hmm.
it seems like what 4 years ago we were at zero, and we've already forgotten what that was like to be because of the inflation that we've seen.
Well, money's really cheap, right? So at that
Mhm.
point, now remember, they're also going to reduce a lot of the regulations and restrictions on the banks. So actually, what is poised to do, like if you're looking for like a contrarian type of investment right now, the Russell 2000 is the place to go because those companies are laden with debt, and if they get 0% interest rates in banks that are less restricted to be able to loan to them, that index goes up. But that world is very cheap money, so you can borrow cheap and then you can put it to work, right? So the market will have its pullbacks and some corrective action, and it always does. But overall, it's going from left to right up. And that's because the dollar is continuing to lose its value. Money is cheap, right? So assets inflate, things that have value inflate, not because they actually are worth that much more, but because the dollar loses value. The other thing is that earnings estimates are extremely low. Like for earnings coming up here, like I bet you for the most part, earnings just knock it out of the park on a lot of these companies. And so if you enter into that world where money's really cheap, it's a lot more freely available, a lot more sloshing around, that liquidity comes in the system, that gets pumped in the markets into other assets. It ultimately creates a massive bubble that'll someday just explode. But in the time being, maybe for the next couple of years, you could see a massive, just ultra bull market. I know that sounds crazy, but look at what happened after 2008. Everybody thought it was the end of the world. What they do, rates go to zero, money's cheap, and they just inflated that thing, and it was up what 400 or 500% over the next few years, right? So I think we are setting ourselves up for that type of world. Those that have money can do really, really well. Those that don't have money, it's gonna, things are gonna cost more, all that type of stuff. And if you don't have your money continuing to work and work and work for you, you're gonna get left behind because your
Well,
dollar will lose even more value every
what
day.
happened after the year 2008 was they started to punish the savers.
Yep.
So what you're saying is that we're going to go back into that world again. And for those getting into real estate, we may see another real estate boom because of this if the
Yep.
rates drop again. So
Yep.
that will be interesting to see if. One thing I'm going to share here is the. Let's see if I got this on the right. Okay, there we go. I looked at a couple of ETFs for the Russell 2000. One, which I'd never heard of, is the VTWO,
Mm.
and it's a little bit less expensive at $87 a share. The options are not terrific. They're just these standard monthlies, so we don't have any weeklies in there. But if you're going to be writing like 6 week covered calls or cash secured puts, this may not be a bad way to go. You know,
Hmm.
you're for a 30 delta into August, well, 29 delta, let's say if you get a buck 30 from something like that, you're margining $8,400. And so that's about 1.6%. So that's not bad. Selling the $84 put, which is down in this area here. So yeah, I've been watching this one. This one actually has an inverted head and shoulders on it.
Hmm.
Left shoulder, head pattern, right shoulder, and there's the neckline. It's starting to break out and it's starting to tangle with that 200-day moving average again. So that's been, I think you're right with that because if rates are potentially going lower, which is what we're seeing in the 10-year note, based on the Fed chairman basically saying, all right, I'm going to put myself in there, a patsy that's going to do whatever he wants to do. This could actually explode because if you look at this
Yep.
on a monthly chart basis, we have a huge amount of consolidation happening here. I mean, literally since the end of what is this 2021?
It's gone nowhere.
Yeah, it's gone nowhere really since the end of 21. It's been a horrible chart, but that means it's doing all the heavy lifting and getting
That's
ready
also a
for.
giant cup with handle.
Yeah, it is, and it's the handle's been kind of lousy because it didn't,
Mm.
the handle actually broke down, but I mean, you could see a slingshot from that. So
Yeah.
that's a very interesting investment idea for, low
Hmm.
low maintenance. I don't know if there's any of those income funds that we could look up for these guys, like the
I mean, you
deployment of
can do,
SPY
I mean,
high.
honestly, you could do like you and I've talked about on different things. Like it might be a good one to look at leaps on. There's different things that you could do with that, but maybe on the IWM or
Oh
something like
yeah,
that.
the IWM. Yeah,
Yeah.
yeah. Let's
But
see how
the
far out we go.
that's one thing to do. But I think that's one of the things that I just think that if I well, I don't think. I know they're cutting regulations, right? So that is happening. Uh, the House and Senate are going to pass the bill. It's going to happen probably within the next week. They'll probably be haggling over some things, but at the end of the day, they're going to pass. They're going to keep tax rates the same. That's all going to stay. Maybe have a few little other bells and whistles in there. So that keeps the status quo. Market likes that, right? And then let's just say he, nominates whoever in the next couple weeks, and that guy or gal says, first thing I'm doing is we're cutting rates, that sort of thing. Now it'll be interesting because you have a board of governors, right? They have to vote, but there's several that have already signaled they'd be willing to start cutting rates as early as July. And I think some of them are jockeying for that position by saying that. So we'll see what happens. But I think that's just the world we're going to
Yep.
because they've even said they came out today. Besson said today we're not going to we're going to refinance the 10 years with the shorter term because we can't afford to refinance 10 years at the rate. So we're going to go to all short term. So whoever's the Fed, they want to push that short term rates as low as possible so they can like just turn over 1 year, 2 year, maybe even up to 5 year bonds at like 1%. right? That's what they're going to do. They're going to go to the short end of the curve. So that's where we end up.
Crazy stuff. I mean, it's
All good
funny.
for stocks. That's all I can say.
It's funny if you think that what 3 months ago we were like, are we going to survive this? Are we going to end up? Is this going to be bear market version two?
Yeah.
And
Well, it
we're
was. It was a bear market, but it
it
was
it
it
was, and
wasn't. It was
it's
a policy-driven bear market, which are almost always resolved quickly throughout history.
if you think about it, Dave, the only bear markets that I have seen that are classic bear markets have
Mhm.
been, and obviously 2008 was a brutal one.
That's a structural bear market.
That was a structural bear market. But really, the only one that we've seen since then has been 2022.
Hmm.
Everything else has been some kind of variation on a theme, generally more of a
Yep.
deep corrective move, a
But
deep,
that was
wicked,
all. But
nasty
that was
corrective move.
also a structural change from ZERP
Right,
to a
right,
higher interest rate environment. That
right.
that is a, you know, almost over a decade, right? Change. So you had, you know, everybody used to the low rates and everything else and stuff for over a decade. Then all of a sudden, within a few months, you're cranking that thing up to, what would be, 30, 40 years ago would have been like, that's not high at all. But from going from 0 to 4 or 5% in that short of a span, that is a structural change, big time. And that's what you saw.
So, do you think there's any chance that Powell puts in his notice tomorrow? He's speaking
No.
tomorrow at 9:30. I don't know if
No,
he's
he's not
speaking
putting in
today.
his notice. He'll stay to the end, and he'll play the game he plays and all this stuff. But whoever gets nominated, like everybody knows, then Powell's a lame duck. Like, why would you? Who gives a crap? What he's only there for 6 more months. Who cares? Whoever's the new person is who the market's going to hang on every word at that point. So. They may do some cuts before the end of his term, but
Yeah.
it's
Well,
all
they're
gonna be up to
pricing
who they nominate.
pricing in three cuts already by the end of the year. So,
So we'll see. But it's not like he can save himself at this point. There's no way, even if he cut, maybe if he cut to zero, he could convince Trump to keep him. I don't know. But it just, when you're getting handwritten letters from the president saying you suck, I don't think you're long for the position.
well, I mean, I've noticed a big change just in this year in that, like, everyone used to breathlessly wait for not only the Fed to speak, but
Hmm.
also any of his lieutenants to speak, and then the market
Yep.
would jerk and react to that. And then downstream of that, derivative to that would be all the reports that they watched, like PCE,
Right.
which quite honestly, before 3 years ago, nobody even knew it
Hey,
existed.
by the way, PCE went up last week.
Yeah,
Nobody, nobody even cared.
nobody cared because
Yeah.
yeah, like the income went down, the expenses went up, nobody cared.
Yeah.
And so I think all of that has changed very subtly. I think the amplitude's been turned down. Like,
Hmm.
look at the reactions in the Fed meetings, the Fed policy meetings that we have. They used to be enormous when
Yep.
we started doing this, 20, 25 years ago. When the S&P was at 1,000, we would have 50-point days. We would have,
Yeah.
5% swings. And now it's kind of like,
Hmm.
because of a lot of things. First of all, transparency, but now I think what the market's realizing is that there's nothing that these guys can do other than to bend the knee and knuckle down and just, what are you going to do? Are Powell, are you going to seriously, you're watching like a hawk for inflation. What are you going to do? You're not going to raise rates. What
You're not
else
going
are
to
you
raise
going to
them
do?
any further from here.
No.
And you're playing the tariff excuse, which the data, because you follow the data,
Yeah.
you're not seeing inflation from tariffs. Like, okay, remember transitory. It's like this is transitory or something. Like it's the same stupid game as before, where everybody knows the truth, but they keep doing that. And maybe it's political, maybe it's not. I don't know. But the the point is I think we're going back to ZERP. And if we go back to ZERP and we get a lot of money sloshing around. It's looking for a home. It's going to go in the markets, and you're going to see the markets go up.
You know, the other thing that I'm seeing, which is a big change, is that I almost think that Scott Bessent has now taken the place of the Fed chairman
Yes.
for, like, remember how, oh, let's wait for the Fed chairman to speak because then we'll know what's happening in the economy.
Hmm.
Powell has decided to go off in the corner and he's fighting a battle that nobody cares about right now.
Yep.
Whereas Scott Bessent is out there like literally every day on news programs pounding these people,
Hmm.
selling the program and making them look stupid in the process of that. And
And
people are
he
like,
may end up being the nominee
yeah,
for Fed chair. We'll have to see. There's some rumor of that.
we
But
kind of
there's
like him
also a
where
lot
he is
happening.
right
Like
now.
so, let's look at a few things. Has anybody looked at Hood today?
Yeah,
Might want to get a look under the hood. No pun intended, but we've got a stock that is just up 12% today, and that's because it is now announced tokenized private companies, SpaceX and OpenAI will be tokenized on the Robinhood chain. So that opens up potential investing into that. And it has gone parabolic. All of its charts are just about exhausted. So will Robinhood come back down to earth some? Probably. But a nice little 10% correction in that, and I'd probably be setting up some puts and selling into that.
well,
But you could see
let's
you
see if you
had
have
kind of
to
a
wait.
cup with handle on it, and
Let,
it's definitely broke out on the daily chart.
let's see if you have to wait for that. So let's go out. Let's go at 46 days here, and yeah, that is a nice cup. Now it hasn't printed the handle yet. So
Yeah.
my handle would be somewhere around 70. If you could get 70,
Yep.
how well can we be paid for 70 at this point? Actually not that bad. That's over
No,
2%.
it's higher beta, so it's going to have a higher IV. You can be paid all right on it.
Okay, so if you got a buck 90 for this, 190 and your
It's about
margin
a
is
little over
$7,000.
2%, 2.5%.
Yeah, 2.7.
Hmm.
That's a kick-ass return on this. Now you're going to get some volatility on there. There's no way this thing is as fast as this one. It is going to snap back, but if it does snap back, we should be all over this one. We should be
It's a
all over
great
this
one to
one.
it's a great one to wheel into if you want to. You could sell that 70, you could put the stock to around, start selling the calls
Right.
and wheel that real well.
Yeah. Big
But
change.
yeah.
That is a beautiful rounded base setting up
Mhm.
now. It's time for a handle because we're just about exhausted in all time frames. So
Hmm.
look aggressively for a pullback on that handle out there, guys. And then
Yeah,
I think you were
look for that pullback down to that 70 range, and that's a great spot to pick some up or sell into that, or
yeah. I mean, look at
it's a good
Coin, but
level.
Coinbase is the same thing. It's coming up to the neckline of
Yeah.
a rounded base. Where you could have got this at 31 bucks a share, and now it's times 10.
Look at that move in just the last, couple weeks from like 250 to 350
Yeah,
on the daily chart. It's or the 2 year you see that you have there on the daily.
I wouldn't be
It's
surprised to see them start to consider a split on this as well too.
yeah. Yeah, these are rocking Carvana. I think we talked about that last week. Look
Yeah,
at
we did.
that stock. I mean,
What's the ticker
again,
on that one?
rocking again. If you'd picked some up last week, you'd be doing really well this week.
Yeah, nice pullback.
CDNA, yeah.
Sweet.
Look at that thing.
Everything is getting to be kind of expensive now. I mean, this is the
Mhm.
thing. Like 20 years ago, most stocks were in the 50 to $100 range. We had very few that were in the hundreds.
Yep.
But this is very traditional. If you read history and go back and read about like Jesse Livermore and stuff like that, they had $1,000 stocks 100 years ago, which have
Hmm.
it's like the Berkshire Hathaways of back then. So this is an issue, and if you know how to trade spreads, then you can trade just
Hmm.
about anything that you want.
Yeah, a little bit of a contrarian to this is let's check it. I haven't looked in a little while, but Walmart was getting beat up. Look at WMT and see what it's done. in the last couple weeks.
So this came up in the room a week ago in our live trading room. Somebody was saying, "What do you think about Walmart and where would you sell a put on Walmart?" And I
Yeah.
said, "Well, first of all, let's look at the chart. Do I like it?" And in every time frame, we have uptrends, we have generally positive price behavior, we have energy. So everything looks really good. Now it's consolidating. It's kind of walking sideways for right now, but this is, and I believe they've played the split game several times in the past
Hmm.
already. So they've got history of splitting. So if this thing does run up to 200, they'll probably bring it back down again. But yeah, this looks really good for, like obviously you'd want to stay somewhere, being assigned somewhere above the 200-day moving average. So like if you sold the 90 on Walmart, so again, let's go out to August and selling the 90, not going to get you a 1% yet. So this is the only
Gotta come back a
problem
little bit.
with a stock like this is that to be honest, when the puts are really poor like this, what you do is you turn around and you look at the
Mm.
calls and you look at
Yep.
doing a potential buy right.
Yep.
Because if you look at the equidistant puts and calls, let me get my magic pen out on this thing here.
Hmm.
So if you look at the equidistant, so right now the price is roughly what 97 or thereabouts, right?
Yep.
So let's go out 7 points down is 71 by 73. And then if we go 7 points up, which would be 105, it's about the same. It's about the same. It's about equidistant for these because it's not exactly in the middle.
What's
It's
the implied volatility? The issue right now, everyone out there, if
24%.
you, what is it?
This is 24%.
Yeah. So
So,
the issue that we're seeing out there right now, guys, is that the implied volatility, and you would expect this when a market that's just gone. We've had, I mean, the turnaround from this is the fastest turnaround of a market in history, I believe, or like the second, from like bottom to now a new high. And that crushes the IV. It crushes the implied volatility. And the challenge when you're in a market like that is it's hard to sell options like out of the money because they're just not paying anything. And that's where if like you're somebody like me that likes to do like iron condor trades, I've actually backed off of my like monthly iron condor trades
right,
because of the fact that you have to sell so close to the money even if you're doing high probability, one corrective move or real spike gets you into trouble. So for me, what I've done is I've gone to more selling at the money, right, on stocks that I want to either own and getting a real nice premium, or doing like my version of a wheel where I buy the stock and I sell the covered call at the money. And then I even buy some defense on the back end side on both those type of trades. And that locks in, my profit for me that way. But at the money is where you're getting any real premium. And that's a little bit different type of trading than your like typical high probability trade. And it is a little bit different for people to get used to, but that's actually the better, opportunity right now. So,
right,
and that's why like on Walmart, you could make 3% buying the shares, selling the covered call at the money right there.
right.
And then, you could even buy some defense on the backside 4 or 5 points down with some of that credit, and you're still making over 2%.
Yeah, it does. It does. Generally, we get so used to like a negative bias to things because people end up buying more puts, and so the
Yep.
puts are more bid up, and so there's almost always a negative skew to things. But there can be times, especially when something's like super bullish, and we noticed this, seriously when they turned on options on Bitcoin last November.
Hmm.
There was a huge upside skew. And so what we
Yep.
were forced to do was just to do a buy right. We had to buy the shares and
Hmm.
go right in with the short calls, and it
Yep.
paid off for us. And not trying to tiptoe around and try to but other times if you're playing with something with a much stronger beta, then it can pay to
Hmm.
to keep sliding that cost basis down to make sure that if you are getting assigned, you're getting assigned at a price that you're happy with. Because that's the number one thing I see with people that are playing the wheel is when they first start the first time, they're scared to death to get assigned. Like, oh my
Yeah,
God,
that's
there's
the
a red
point.
candle. My position's down. What do I do? I'm like, wait a minute. Wasn't your
That's the point.
original goal to get assigned on this? And they're like, oh yeah, I guess you're right. But
Yeah,
it
and
can
for
be
everybody that
emotional.
are, for people that are watching, listening, so the traditional wheel strategy, if you maybe have heard of it or just not sure the execution of it, it's selling it out of the money put lower than the price. So like just use, let's say you get $100 stock, selling a put at 90. So that's 10% lower. And if and you're happy to get put the stock, and you're happy to get that. Think of it like a piece of real estate. Let's say you got a $100,000 property, right? And you want to put an offer in, you're not going to put an offer in typically at 100,000, you're going to put it lower. So you're going in at 90K, right, for the property. And if you get it, that's a good deal. Now the beautiful thing about options, and this is you don't typically would see this in the real estate market, is like you would go to the seller and be like, okay, you got a $100,000 property. I'll tell you what, I will buy it from you at $90,000, but you have to pay me to buy it from you at $90,000. Like that doesn't exist, right?
Yeah,
So, you want to think about that. You get paid to buy it at,
yeah,
90 or whatever it is. And then you can turn around and when you own your property, you can collect rent on it, which is selling the covered call on that property, collecting that premium, every single month, right? Making your money on it. So that's the wheel, right? You sell the put to get in, and then you turn around and you sell those monthly like 25 delta covered calls, on it, and just keep turning those things over until it gets taken away. And if it gets taken away, great. You turn around and do it again somewhere else. But that's the idea. That's the point of it. So not it's if you're doing that strategy, you don't want to be you actually should be excited to get put the stock to do that, right? That's kind of the point. You're getting it at below the market value from where you started. So
yeah. It did take me a
um
while to get used to that the first time.
yeah.
Like, and then that happens around the time that you're thinking around investing shifts, where instead of playing from a perspective of fear, all of a sudden now you're like a perspective of opportunity, where you
Right.
start to think differently about risk. And that's
Yeah.
usually where we start to see people turn around their trading. And instead of doing the
Yep.
same thing everybody else does and panic sell, all of a sudden they're stepping in front of the freight train and
There.
picking up inventory at that point.
Yep.
So,
La-
hey guys, if
Last
there's
thing,
any
yeah,
questions,
last thing while we're on it, maybe look at Bitcoin real quick because we've covered the rest of the market. Let's cover Bitcoin real fast.
well, let's do that. Okay. First of all, we're going to get a real pretty picture here. Yeah, look at that Robin Hood. That's insane. Okay, talk about chart patterns, guys. I mean, this is crazy. I love this. We have First of all, I'm going to go out to the weekly chart. So here's the weekly chart, and what this is this is a cup with handle, which broke out in the latter part of 2024. And what do you think we have here? Same thing again.
Mhm.
So this cup with handle, the target for the cup with handle is up here at about 120,000. And so it's not quite ready to go for that. But also what we have is we've got this dude here, and if we play the same game on that, this is targeting somewhere up around buck 45, buck 47. So right now, I mean, we have all kinds of measured moves that are pointing higher. And this is by no means is this the same type of price action as we had back here. Yay, that's a trade. So I think that was our long condor that just fired.
I do too. I think that was it.
So yeah, we're
Yes,
not
it
getting the
was.
same type of reaction at the highs like a double top. So a lot of people are crying, "Oh, double top on Bitcoin." No, we're not seeing the same type of reaction here. So I think this one, it looks really really good right now, and I will be selling into strength on the way up. So I'm going to be doing a little bit different than what people usually advise, like hold on to the very bitter end, but you never know when that bitter end is. It's always easy to see. in the rear view mirror. So I'm going to be selling on the way up incrementally. So got houses to buy and things like that. Any other questions from anybody else? Okay. Well, it's been an interesting quarter. It's been an interesting half of the year. I wonder if we're going to see something similar to this in the back half. I think probably not. I think the market character for the
I do
next few
too.
months is pretty well set. So unless something really weird happens, I think we get on board this train and we let it ride.
Yeah, I think, by the end of the year, you're higher. That's what I would say. That doesn't mean we won't have some corrective action, maybe in the first, next couple of weeks and here in July, but that August and September time period, fourth quarter, I think will be great. And if they get somebody in who's going to take rates to zero, look out. The market, that liquidity and everything into the market
Right.
is just, crazy. You've seen it before. You saw it after COVID. You saw it after 2008. That's what it looks like. So just get ready for that. But in the meantime, have a wonderful 4th of July. Enjoy, obviously Friday's no trading or any of that, but have a wonderful 4th of July with your families and just, I can't say it enough, thankful that we get to do this every day in a great country like we have. So,
Yeah, and don't forget to take Thursday afternoon off too. The market shuts at
yeah,
1 o'clock, so we have
yeah.
it's a 3.5 day week. So, all right, guys, thanks everybody. We'll see you guys next Monday. Adios.